What's up, guys? This is Tyler from Division One Trading. So I'm just going to be going over this setup that I posted on my Instagram. This is the hidden head and shoulders. So pretty much this setup, you're just going to see some push, right? And it's going to create a high. That's going to be our left shoulder. Then price is going to go into a consolidation, might go a little higher, might go a little lower. Then we need it to make a higher high. After that, we're going to expect that to be our stop hunt. That's going to be the head. Then we want to see a breakdown of that neckline, right, using that left shoulder, right? And we want to see kind of like a head and shoulders inside of this head and shoulders, right? So it's a little hidden. Then after this stop hunt leg here, right? So we have the left shoulder, and we have this stop hunt leg. Now, when price trades down and breaks market structure here, when we return into that old level here and form that head and shoulders pattern, right? 1, 2, 3. When we trade down, then we expect it to go below our consolidation into what we call the bank move, or where the move started. Right, so the move started there. That's where it started pushing bullish, and then it failed here. So if we're getting in short, we want to be getting in here. So explain that here on the charts. So looking at price, we have Monday here. So Friday pushed up and then really traded back down and then closed. So looking at this area, we're looking at that as a zone. Right, so we go from the body there to the wick here. That's what forms the zone that we're looking at. So this here is pretty much the same setup that we have. We have the left shoulder here, right? Here's that shoulder. Then price trades down and we go into a consolidation there. So then price leaves that consolidation and goes above this level. That's the stop hunt, right? Then inside of that, we have this other smaller head and shoulders. And this level here is what we're looking at, right? The left shoulder, we're looking at this zone. So when price trades above this high, then down, if we have a head and shoulders here, and we have this one, which is hidden, right? The hidden head and shoulders, then that sets us up for a bearish setup. So we ended up taking the trade in the signals group on, this was Monday, Tuesday, right? So we had seen this setup here. Then we went into Tuesday's trading, and when bond open happened, we saw this engulfing candle here, and we pulled on that. And we'll play the recording in a second. So here, someone asked me to show some examples. So that was from the 9th, I believe. Yes, this is the one from the 9th. So right there, we had sold at 36,350. Our stop was at 36,390, so that was 40 points. And then we had our take profits down as low as 36.50. So here, this is where we entered, and this is where our stop was. And so if you took profits on the first day as a scalp, it went for 100 points. About 160. And then if you'd have held for a swing, you could have held it all the way to the 36 target. Which would have put you around 350 points. Yeah. So solid trade there. So let's go into a little bit of the price action real quick. So we traded into this high, then traded down, right? And we talk about a bearish candle. and what a bearish candle looks like. So if we're going to be bearish, we first anticipate a bullish move, right? So we see the push up and then failure to make a higher high, right? If we're looking at market structure, we have a high, higher low, higher high, higher low, and then we have lower low, lower high. So right there it shifts, and as it trades down, you can see here on the 5-minute, we have an engulfing as well, right there, and then the 15 trades down, so that's where we entered on that pullback there, and then it traded lower. So you could either hold that trade or get out. So if you kept your stop there, you're still only risking 40 points, and you could close off partial of the trade and then hold the rest. And you can see they swing right back at that entry point. And same thing I was saying, right? If you're going to be a seller, you want to be waiting for the bullish move to happen first and then sell into that. So same thing, it hits that price level. We have some divergence there, and then we get an engulfing. And so we have the engulfing there, and then we have what would be a John Wick there. So we want to see that area be sensitive, and it trades away from it. And this one went for a while, and then has finally made its way, turning back around. But solid trade, gave away a ton of pips. So yeah, I'm going to play that, and that is the hidden head and shoulders. To that support level, we take the short, and it was in that engulfing as well. So this is off of that hidden head and shoulders, right? This is at bond to open, and we're taking that short trade. And we're targeting that low that you see to the left there, and we're also targeting that larger area below it. So price started taking a little bit longer than what you would usually expect, but started running and then had this pullback. When it pulled back, we ended up taking a little bit off the trade just because we didn't want any extra risk. It wasn't very much risk based on the account size, but it had already taken those lows, and we didn't want to get caught up on the wrong side of things. So, sorry, I was just checking my charts there. And so price retraces at us one more time. That's where we take a little bit off. And then it begins to obviously kind of just consolidates for a while. Yeah, here we zoom in a little bit. And so we took a little bit off the trade, and now we're reducing our risk just a little bit. And we're checking the S&P and NASDAQ, seeing how they're holding up or if they're falling down. That's why you see me keep flipping to the other charts. And so, yeah, so we start pushing lower, finally making some expansion there and taking out that low. So we assume that if they're willing to hit that low, that they're willing to go lower, so we hold on to the trade. And it pushes down to our heavier target there. So the trade kind of just runs around for a little bit, and at this point, we don't want to put our target too close. We don't want to put it too far. We really just want to see what we can get based on our market structure. And so if you just look to the left, you'll always be able to find that market structure. And here you can see it's pushing deeper into our targets. So now trade is at break even. Our targets have been hit, and we can start to scale more out of the trade as it pushes us deeper and deeper into profit. And again, this was a trade that if you don't move the stop loss, you can still take it as a swing trade and get a couple hundred pips out of. But our target was hit on this trade. That was our 100 points there, and that was one of the signals that was sent. So if you don't mind, leave me a like, give me a subscribe, and I'll get more content for you guys. Appreciate it.